Welcome to TheoTrade. This is Don Kaufman. August 16th, 2022. We're just minutes after the cash close here on this Tuesday afternoon. Everybody's already asking the question, did we just see an end to this rally? A pretty phenomenal intraday reversal was met with, well, it was really considerable sell-side activity. Volume picked up. There was a degree of intensity. We're actually going to dedicate a little bit of this evening's video to trying to answer that specific question. Is that it? Is the rally over and done with? I mean, hey, listen, lo and behold, the S&Ps, they still finished up the day 7 points. Let's not discount the fact that the marketplace finished higher, and we're already questioning, was that it? It felt, okay, like a rough ride to the downside. In fact, if you took a look at the Nasdaq, how violent of a move was this? We traded 13,740. Okay, it was a few minutes later, it felt like we're trading 13,580. So in terms of reversal, you got yourself a reversal, even though we bounced back from it. Nevertheless, let's explore other areas. And when I say other areas, is there anything actually confirming? This is where people, they start digging for news. What was the news? What caused the S&Ps to sell off? I got to tell you, looking around over there, there's a lot of different catalysts, but it's neither here nor there. The one aspect is we spend so much brain power, like what caused the market to sell off? What could it have been? Forget it all. All you want to actually look for in kind of answering that question here is other confirming factors, meaning that, hey, if you're going to look for the end of the rally, and speaking of the rally, I mean, have you looked at a 30-day, 1-hour chart recently? Okay. I mean, this thing is just, it's a straight shot to the upside, which is next to impossible to strategize around. Like, what can you do? Well, you can be long, or you can be long, or you can just get run over by not being long. But I got to tell you, this one-sided action, although it's difficult to strategize around, can just create phenomenal risk reward for those that are actually willing to step up at a point in time. And I'll make just a quick point with this. If we take a look at the XLF and go over to auto expected moves, recognize the XLF a couple of weeks ago broke outside the expected move, It mellowed out, then it smashed the expected move. And this week, oh man, we're already halfway home to the upper edge of the expected move. Tell me that's not going to be a phenomenal risk reward when this market reverses. And by the way, if you listen to me and I sound pretty sure that this marketplace is going to reverse, well, it will. Listen, all markets are going to have pullbacks. And I love situations like this where, you know, first of all, I make no qualms about this. I can't stand one-sided trade. Like there's nowhere in here that you want to get long. And the reason you don't want to get long anywhere in here is because there's been no pullbacks. Like you don't want to buy on top of buying and into a gamma squeeze. Nevertheless, if you look at it at this point in time, like you got to ask yourself, what's the upside potential, okay, versus some of the downside risk? And I do believe at this point, even though you can make the argument it's going to be a 50-50 shot whether we go up or down. If we do go up, okay, the up is going to be limited versus some of the downside capacity in the marketplace. In fact, that's one of the overwhelming themes that I want you to understand about this evening's video is, you know, it's kind of fun to talk about, like, is that it? Is that the end of the rally? That's fun in games. Who cares? You know, I'm not going to be able to influence what those S&Ps are going to do overnight, but I can absolutely influence what my risk reward happens to be. And I believe at this point in time that the short side of trade holds phenomenal opportunity, okay, versus being long. And by the way, I don't mind, like some people like will vehemently disagree, probably going to get, you know, 200 emails on that one. Like, what are you talking about? The economy is making a comeback. Really, don't fight the Fed. That's all I have to say on that front. Nevertheless, okay, this isn't about being bullish or bearish. All I'm simply saying is if you look at products, like let's bring up another one like XLU, okay, how phenomenal that risk reward may be right now. And I probably could have made that argument even a week ago, but you start looking at like auto expected moves in here. All this auto expected move does, it just exemplifies like how the move, okay, outstripped what the marketplace thought. Like This is the expected move. It's like 3 times the expected move. The next week is mellow. Next week after that, it's like 2 times the expected move. This week, we're already hitting the upper edge of the expected move. Like they're not just big moves, okay? We're talking statistically wild things are occurring right now. We've all seen rallies before. We've all seen bear market rallies before. And by the way, am I allowed to call it a bear market rally? Because I said this the other day, and somebody actually, they did take the time to send me an email. They go, it's not a bear market rally anymore. It's a bull market because the Nasdaq is over 20% off of its lows. I do believe that I've been alive and trading long enough to see 30% rallies off the lows and us tank a little bit. You need only go look back at the Nasdaq tanking from roughly March of 2000, 2001 into 2002, and I believe there's over 7 times, okay, was the market called a bull market before we actually hit the bearish bottom. Now, again, I'm not trying to emphasize my bearish theme on this evening's video. Today, I'm only trying to emphasize how there is some phenomenal risk reward afforded to you for those that understand how to strategize around upside potential versus, downside. And in this particular case, looking at something like XLU, I think the most exciting thing about XLU, it only has a point, basically local, just round it 0.24 beta. And that means it's supposed to move at, a quarter of what the S&P is moving on a relative basis. It's moving more than the S&Ps right now. And I think that this is going to be an incredible opportunity. The whole world wants to pile into the utilities again. So tonight is much more about that, okay, incredible risk reward than it is, did we just actually, see an end to the rally? Speaking of an end to a rally, point that I want to make again, doesn't matter what the catalyst was for the sell side activity. All that matters, in my opinion, is that you take a look at like volatility. And this is a bit of a tell, and it's not a positive thing if you're bearish. And I don't mind saying that's not exactly a positive thing. Look at volatility before that sell-off, and okay, obviously it spiked, but it collapsed right back down. And ultimately, what volatility says, nah, it's just a little bit of a flash in the pan here of some sell-side activity, nothing more. If I take a look at volatility futures, much of the same. Okay, there was some vicious sell-side activity. Nevertheless, where did volatility end up? Pretty much where it was, which is the bottom of the barrel before that sell side happened. So frankly, looking at volatility, there's no read whatsoever into, is this marketplace going to reverse from here? Like, did the rally just come to an end? Volatility, not only isn't it conclusive, if anything, volatility still points, okay, to more bullishness. I look towards the bond market. The bond market, nothing to see here. The bond market, during that wild bout of selling in the S&Ps, almost unimpeded. I look down to the depths, okay, of short duration volatility. I looked at VVIX, okay, you got nothing. So lo and behold, did we just see the end of the rally? Volatility in no uncertain terms saw nothing, okay? The bond market saw nothing to confirm that this is going to be sell side. On the flip side of that, though, it was, okay, from a volume perspective, a fairly significant, okay, period where, again, we did see some trades start to unload. However, we didn't see consistent trade north of 5,000 contracts a minute. Again, there is no confirmation whatsoever at this point that we just saw the end to the rally. I know, okay, I want to bear up as much as the next person, and I am. But that's exactly why I wanted to emphasize, okay, in this evening's video, viable risk reward. Be willing to step in the front of a freight train. It's okay, so long as you actually look at that upside potential versus downside risk. You come in with a defined risk kind of stance, all right? And you can weather the storm a little bit. Maybe there is some more upside over here, okay? But then again, we saw some fierce selling overnight. We may drift listlessly lower. I think in the S&Ps, if we do head a little lower, first stop, of course, would be a gravity point, which is that 42.11. If you were able to actually get under 42.11, you're trapped in a volatility box from 39.31 up to 42.11. Nevertheless, one interesting aspect about this week's trade is right here inside of the expected move. All right, so here we are. We're only 2 days into the trading week. There are some FOMC minutes that are going to hit the tape tomorrow. Neither here nor there. What's the FOMC going to say in those notes that's going to be spellbinding, other than the fact that we are prepared to do something, okay, if our inflation continues to do something, in which case the Fed fund futures right now, they're 60-40, 60% for a 50 basis point hike, 40% basically for a 75 basis point hike. But the one thing I'll kind of leave you with here is that, yeah, we're only a little bit into the week. There's a $75 expected move higher or lower. Quite frankly, we've done absolutely nothing. One last thought, though, is that lower edge of the expected move almost correlates to the 42.11 inside of the S&P futures. I don't know about you, but at this point, I will take even a minor reversal in this marketplace simply because, oh boy, could we use some two-sided trade. Listen, okay, sheer opinion here. Look for some sell-side activity in the days to come. Any catalyst could kind of set us off, but just recognize right now that selling, if sellers show up, it's going to be fierce. It's going to be fast. And I know everybody wants to look at like Bed Bath & Beyond to get excited about it. But the reality is, okay, that sell side activity, if it comes into the S&Ps, it's going to be fierce. We're going to reverse the gamma squeeze and see some fairly violent and tumultuous trade when that rally is officially over. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.